So hello everyone and welcome to another installment of our technical analysis webinar with Trevor Neal. Thank you for joining us. As always, we'll aim to take up no more than 30 minutes of your time, but we may spill over by 10 minutes or so. So just to remind you, if you haven't done so already, please, we strongly recommend that you download the handout from the Handouts tab in your GoToWebinar widget. You should be able to see in the tab there that there's a little handouts thing saying 1 out of 5 or 1 of 5. It's a PDF. Please download it. It's very useful. It'll help you understand the different indicators that Trevor's using and why he uses them. Even if you're very experienced, it should be some help to you. So I'll just give a brief introduction to Trevor Neal. He has, for those of you that don't know him, he has over 40 years experience working as a trader and technical analyst. He worked at companies like Merrill Lynch and Bloomberg, where he was global head of technical analysis. He managed a large hedge fund in South Africa, and for a number of years, he was also a founding member of the International Federation of Technical Analysts. So before I pass over to Trevor, if you have any questions to ask him, please do so in the questions tab on your GoToWebinar widget, as you normally do, and I'll pass those on to Trevor because he won't be able to read them whilst he's doing his presentation. Please keep the questions on topic, and if we don't get around to answering your question, please feel free to send them to webinar@myfxchoice.com and we'll pass those on to Trevor. So Trevor, without further ado, please take it away.
Okay, Dan, thank you very much indeed. Thank you very much, everybody, for joining us today. The dominant theme is the dollar weakness that has really reasserted itself, and we've talked about this before. This long-term trend, we had seen some dollar strength for over a period of time, but now the structure of the market has changed to be dominated by dollar weakness. It's showing itself differently in different places, and some places I think it's got slightly overextended in the short term, but we're going to talk about that in a moment. Let's take the euro firstly. So this is a weekly chart of the euro, so each bar is a week here, and we're testing this important resistance point, and you can see that this week, today, in other words, we pushed ahead. It looked good, but now we've got a rather negative candle as we close this session. So sorry, we just switched currencies there without me asking it to. So here in daily chart, using a daily chart, we've got in detail that consolidation we were just looking at there, 116 up to, I would say, 119.50, that sort of area. Looked as though we were breaking out, but my goodness, it looks like another one of those now, and we've pulled back again. So it's not for sure that it's going to go finally. Earlier this morning I thought it looked great, and it was finally going to break out this range which has dominated since August. But it's not a very constructive short-term candle, and we could ease back inside the range and continue inside the range. We haven't got any bearish divergence in the RSI. The RSI is still climbing, so from that point of view, it's looking okay, but this is not a good candle, and maybe we have to wait a bit longer for it to break out, if it's going to break out. Now, I've got a problem with my cable prices, so I'm not sure why that is, but let's have a look at the euro sterling. So this is the euro, so going down, here's the dollar going down. Here's the euro improving against sterling, and pull back a little bit today, but an improving picture. We seem to have put in a significant and important bottom here at 888, 1, 2, 3 lows there, and holding. So it looks as though euro sterling is breaking up. Before I go on, I want to show you a chart which you probably haven't seen before, and that is not here. Where is it?
It vanished.
It vanished. It's like a terrible joke, but there we are. Here it is. Now, I'm not sure if any of you have seen this type of chart before. It's called a relative rotation graph, and it was something that colleague and I, Julius de Campenaar, developed, and it's available on Bloomberg and Reuters and other platforms, also for free on our website. But I just want to show it to you because what we've got here is the G7 currency pairs, and anything on the right of this vertical 100 here is outperforming the dollar. So the strongest currency against the dollar is the New Zealand dollar, next Norwegian, then Australian dollars, and if you like, most closely correlating with the US dollar is the Swiss franc. But what's interesting is the vertical axis, the momentum aspect of it here. So this is outperforming because it's far to the right, and the higher one means outperforming with positive momentum. So this means it's strong and getting stronger. So this is a different way of visualizing data, and one way where you can look at all the currencies together, like for like, apples and apples together. So we can see that generally currencies are outperforming the dollar. All the major currencies are outperforming the dollar, some more than others here. And then you've got the direction that they're heading. These tails that we've got here are, this is daily sampling here. So this is yesterday's close, the day before's, the day before, the day before, the day before. Last 5 closes back. You can extend that here, and you can go back and forward in time like this and see how things are moving. So it's an interesting way to observe currencies where you may not have seen it before. But it brings me, the purpose I wanted to show you this is because I want to look at these two that are furthest on the right here. These are the ones which are moving most strongly against the dollar. So let's go back to our charts now, and I will quickly just go through a couple of others before I get to where I want to go, which is the New Zealand dollar and the Norwegian crown. So the Japanese yen, firstly. This is the daily chart of the yen. Dollar going down here. This is the dollar weakness here. It's congesting a little bit here, but what is always important to look at is the long-term chart. This major level of 104.50 here. Are we breaking it? This is so difficult. It looked as though it was breaking it, then it's rallied, then it's just consolidating around it. This is an important level, 1, 2, 3, 4, 5 at least points on it. It should cause a big move, but which hasn't actually happened. I'm surprised about that. But I'm watching this very closely. This could be a major message, a major move in the near term. Quickly, the Canadian dollar and the Australian dollars. Canadian
Trevor,
dollar.
we've got a question.
Yes.
Can you take it?
Yes. Yeah. You wait until I change subjects. It'd help a bit, Dan. But yeah, that's.
Yeah, I was just waiting for you.
Yeah. No,
what are your thoughts on you? Sorry, the question is, what are your thoughts on using Pitchfork and client net long and net short sentiment in trading?
Andrew's Pitchfork, I think, is very good for long-term trading. I don't think it's got an application in shorter-term trading. Some people will disagree with me that. You ask me what I think, that's what I think. People use it mostly in the stock market and not in the foreign exchange market. There's some question that as to the logic of it working at all in the foreign exchange market, because the foreign exchange market is a ratio of things and not an absolute value. That's an argument that people do have. And then the other one was the commitment of traders, did you say?
That's right, yeah, on using Pitchfork and client net long and net short sentiment in trading.
Well, I'm not sure what data you, is this a broker which publishes their own clients net long and not net short? But the data you have got normally is the commitment of trader data, which is published on the IMM currencies. I'm not at all a fan of that because that particular market that you're getting that data from, and even if you're getting data from a big broker, it's a tiny part of the market itself, and so I don't think it's indicative. And it's also heavily dominated by the small private investors. The institutions are not trading on those markets at all, so they're just simply missing. There are people that are called large commercials, but the large commercials are not participating in those markets. And so I think they have a story to tell in commodities where the commercials are trading in those markets and hedging in those markets, but not in the foreign exchange market. The large players are trading in the cash market. and you can't tell what they're doing. There is no published data of that, not what the large are doing. Okay.
Well, thank you for your question. That was from our friend Noble.
Yeah. Oh, is it? Okay. Thank you, Noble, for that question. And you did ask for my opinion, and I'm not saying that I know everything, and that's the only answer. And Andrew's pitchfork, I do question whether it can work when the security is a ratio. I don't know if you thought about that.
Whilst you're looking at the
you're
looking at the Canadian dollar, Trevor, we also have a request to look at the Canadian euro pair. So I'm not sure if you can squeeze that in as well whilst you're looking at the USD.
All right.
Canadian dollar.
The big thing about the Canadian dollar versus the US dollar is this very, very important level around 130. I've drawn two lines here because it's a zone, and we're challenging this now. This is the weekly chart of it, and we're challenging it. And I mean, really, would have enormous implications if we break it. Let me just show you how enormous this is. I'll produce a 10-year chart. So we're testing this level here. That would put all this trading since 2018 above us, and therefore forming resistance. So, and we're challenging it right now. So watch this like a hawk. And I'll just put this back to, and then did you say so what was he asked, the person asking
sorry, the gentleman Farhan Habib is looking for the Canadian dollar, euro.
Okay.
Because you just had USD Canadian dollar on, didn't you?
Yeah. Okay, just put it in here. And here it is. It'll be unlabeled, of course. And you can see I don't look at this much because it's pulling in the data. It'll come in. Oh no, it won't. It's decided to go on strike. I'm sorry. I'll try it again later if you don't mind.
Okay.
Okay. So Australian dollar, I wanted to talk about this one. Look at this, what an important level we're at. It's not surprising we've got a little bit of a black candle here as we hit the resistance from the high of September, but it's an important level. This would make this some sort of triangular consolidation and confirm the breakout, this being a flagpole and this being another flagpole, potentially extremely bullish for the Australian dollar if it can make that break. And it does look like it will. The weekly is MACD is crossing. The RSI is coming up on the weekly chart, which is nice. No divergence there. Likewise on the RSI, on the daily chart, the MACD is positive. ADX is coming up, the trend is strengthening. Trend is of course up, and here we are testing. So yes, we got a black candle today, but that's to be expected when you test a high like that. I'm going to just touch that again and see if it's going to be better behaved. No, it's not. And New Zealand dollar, Japanese yen, that's zooming away. Of course, you've seen from the RRG chart how far to the right the New Zealand dollar is, so no surprise there. And picking then that currency which is stagnating against the US dollar, this is a good pair to make. Although I'm a little bit worried about slight divergence here, which might stall the advance, but it continues to look good against the dollar, as many currencies do. The South African rand and the Mexican peso. Now, these are ones where I'm worried about the divergences. These have been somewhat of one-way street, making money from being short the dollar, but the picture may be changing in the short term. There should be some we might be seeing some correction in that now. And that's also the case with the Mexican peso. That's also diverging in here. See here, the lower lows, loss of momentum on the downside, turning here. I could easily see that rallying a bit more, but within the context of a downtrend in the dollar itself. Now, I just want to, before I finish with the currencies, go back to the Norwegian here, and we had been talking earlier in earlier sessions about the big double top here, the breakdown, the break, the rally to the break point, the fall, now going towards the minimum price objective, hasn't quite done it yet, which is this previous low at the end of August, beginning of September. So if this all turns out as it hopefully will be doing, that we have a perfect double top, and this is a textbook double top. It's one for your album there. Now, don't forget the position of the Norwegian crown in the in that it is right over to the right in the relative rotation graphs. But here's the problem here. We're coming down to at 880, a very, very, very important and significant support point. With this low from earlier this year, and then the 2019 low, and then these series of highs here, which were resistance, have now become support. I think it's going to struggle to make its further progress from here. So as a matter of choice, this is not the one for me. So just going back to the RRG chart again. So this is the Norwegian crown here. It's got a lot of positive momentum, but it's hitting in an absolute term its resistance. So the other one to look at is the New Zealand dollar. So let's look at that on its own now. And this is the weekly chart, and I want to just show you this in a long-term perspective. The weekly chart, what the context that we're in here. I'm going to put up 10 years of data. This is powering away. When we started doing these talks, we were down here. I told you how important this breakout was here, and now we've surged from it, and we've got some sort of minor resistance, but really the heavy resistance doesn't come in until 72. And so of the, the choices that you've got, where the strongest ones are. You can see that from relative rotation graphs. Of the two that are furthest on the right, one is hitting substantial dollar support coming up, and it would be hard to imagine that that's going to go through that like a hot knife through butter. But this one here is the one that has the least resistance and can keep on powering ahead, and it's a thing of beauty in my view. Things of beauty, Bitcoin. What a amazing run this is that we're witnessing now. Here's the weekly chart. We are challenging intraday breaking the 2017, December 2017 high. I don't think it's actually going to present enormous resistance. We were there so briefly. I'm impressed with the higher highs in the RSI here and the MACD powering ahead beautifully. And look at this behavior here. So we just, with the selling that came in through Thanksgiving, I think it was just some profit taking to do with Thanksgiving holiday, and then over the weekend the market consolidated, but it was greedily bought by, there was enough bulls around to mean this advance didn't develop into anything significant at all, and then this morning we have gapped higher, and we're testing the previous highs. So I do think this is going to go further. This one, Ethereum is exactly the same chart. Ethers here gapping and testing its previous high as well, and then Litecoin too. And we can do RRG graphs on this. This is the strongest of them all. Litecoin. This has got a little bit more to do before it tests its high, but I think this one is playing catch up, and it's going to do it quite without much resistance at all. So this sector is extremely exciting. Now let's move on to the stock indices next. The S&P, which should be exciting and traditionally is exciting and leads us, is becoming a rather dull thing now. Yes, we're strong and steady and so forth, but there's so much more around which looks much better than the US 500. So we have gone up, and it is okay, but there's just a better around. And if you want to look at slightly sicker than the S&P is the tech index, the tech 100, and that too, it hasn't made a new high, and it's still looking quite soft. And this reflects some of the names that we've got here in the technology area are holding back the index instead of leading the index. The FTSE is not great. It's powered ahead, but look what we saw, this divergence in the RSI, which was a warning that potentially we were going to run out of steam here. And it's hard for the FTSE to go up when the pound itself is so strong, because you know, so many of the constituents of the FTSE are miners and are dollar earning companies. And so here we've got a bad day today, looking like potentially a small double top in here and breaking down from that. But it does look as though we're about to have a correction in the bull run, the nice bull run that we've had earlier in the month. Moving though to the German 30, soon to be 40, this one is attacking a very important resistance level. I put the weekly chart on here. Let's go back, not to 10 years, that's too much, go back to 2 years. And we're coming back, we had these incredible gaps here. This gap is being tackled now to be filled. There's not a lot of resistance at the high. There is a resistance from the gap. We've had two highs here, but this is the strongest of all the European indices. It's the only one that's actually unchanged on the year. All the others are all down on the year. So this is definitely the strongest one. And this one, you know, watch for the break. The break hasn't happened yet. But the best of all is the Japanese Japan 225, and this is powered ahead. And you know, we talked about this and how important this break was, and I really, you know, couldn't have said it more strongly. Look at this. This is in 2017, 2018. 2019, several tops, and then in 2020 we make the break. This is a big fundamental shift in Japan. Japan have been, you know, lagging, sogging, the lost decade and so forth like this. But this chart line here, the 24,000 level, was the signal that was over, and we made the break. It's powered away here now on the weekly chart. And it's looking extremely strong and leading the other indices up. And so here's the daily chart now on it, and it's still looking good. Today's not so good, but you know, it's maybe going to have a small correction. We have got a little bit of a bearish divergence in the RSI, but I do think it's going to be nothing more than something like this type of correction, not a change in direction. Now, moving to sad old gold. Now, what's wrong with gold? Gold would traditionally go up when you had weak dollar, and we've had a weak dollar, but it's gone down with the dollar. What we talked about so much on gold was this pattern here. We had this support level, horizontal support level, and then the declining tops. I put it as dashed here, but because they don't line up, but high, lower high, lower high, lower high, lower high, down, down, down. Every time gold rallied, the sellers came in earlier. They were stronger on here. So we've now, we made the break last week, on Monday last week. We broke down, and so now we're heading for Fibonacci to help us find where it's going to stabilize. The first level it comes to, which is pretty well the low of today, is the 50% retracement at 1760. But we've got a band, a zone of support which extends from 1760 to 1690. So somewhere in there, I think it's going to find its footing if this long-term uptrend is intact, but it's a very disappointing performance from something which had a tailwind from the weak dollar, and yet it's done what it's done. Crude oil has been, just by the way, before I leave gold, sorry, going back to gold, I won't show you the chart, but you can look at this for yourself. Look at copper. Copper is trading at, I think it's a 17-year high. Copper, dull old copper is at a 17-year high. So there we are. It's not as shiny as gold, but it's a better thing to be long of.
Actually, Trevor, we do have a question in
Yes.
gold. We do have a question in gold. Do you think the gold could go to 1725 in early December? 38.2% of retracement. The gentleman, it's Noble Thomas, he says in 38.2% retracement of 2018 low and 2020 high and the low parallel line of August and high in November. Could this be the end of the downtrend since the December and January are bullish months for gold?
Cyclically bullish months, and that's true. But I won't say you can't. That's not going to happen. I don't know whether it's going to happen or not. The thing is, at the moment, it's looking weak, not strong, but weak. And I think, therefore, we have to look at this 50% level first and see whether it's holding there. If it holds and bounces from there, it meets resistance at, I think, just above the 38.2 at the 1850 level, these lows in here. And we'll have to see how it behaves when it gets here, if it gets here, or whether it's going to correct a bit more on this move. I don't think, to me, there's anything to say that this the gold is starting to go up yet. The RSI is still going down, the MACD is going down and widening on the weekly chart, so the longer term trend is in fact strengthening. I'm having quite a lot of data problems today. Shame on Reuters, I'm obviously not paying enough for it. But we've lifted slightly, and that's sort of very slightly constructive candle. But personally, Noble, I think it's a bit early to make that kind of call for me, anyway. Crude oil, my goodness. All right, so this is Nymex Crude. We broke the 44 level. This is on the weekly chart here to show you the big picture, and I just want to show you what a clear run we've got towards $50. So the easiest course without resistance is upwards to $50, another $4 or $5 from here. MACD is positive, the RSI is still climbing, and here's the daily chart here. So we've had two lower bars here, and so it's correcting a bit, but the RSI is still climbing overall, and so I think this remains still rather strong, and overdue short-term correction is taking place, but it does look as though it can go higher, and it doesn't meet any resistance to its rise until we get to $50, of course, a round number. Now, finally, going to stocks, we over the last few weeks, I've been favoring a stock, but I've been favoring non-tech stocks and going into miners and banks, these out of favor securities. So the week before last, we liked HSBC, and that's powered ahead. Before that, Barclays, and that's powered ahead, and then JP Morgan before that as well. So JP Morgan up here, and a little bit of correction going on. Oh, I'm having such trouble. Last month we had Glencore, and Glencore is powered ahead since we bought it. We also recommended Daimler, such out of fashion securities, things that, the old industries make things, have factories, employ lots of people. These things are coming back, and so I continue to like these. So oil, banking, airlines. Look at Boeing, for example. And we hate Boeing, don't we? except I'd rather be long. And so I think it's the airlines, EasyJet, and the airlines, and even retail too. They're so sold off, and there's and you know, the news has been so depressing for them, but there's enormous bounce potential from them here. Whereas in the tech area, we've got some quite soggy looking charts, toppy looking charts. You know, this isn't very exciting. This is Apple here, Warren Buffett's largest holding. You know, something like 30% of his portfolio. But you know, I wonder whether Warren Buffett should do what he says rather than, you know, get involved in technology. Like, you know, he likes to things he understands, things he can see, the factories and things like that. Not this. But anyway, the technology stocks are correcting and not looking at all the best looking charts at all. So there was Alphabet and Nvidia here. Look at that, it's pretty flat in the last few months, whereas we've got these great bull markets going in these out of fashion areas: banking, airlines, old oil, you know, taking oil up out of the ground, retail as well. Okay.
We've got a request actually. Trevor, to take a look at the Tesla chart. You've got a second.
Okay. Now Tesla is something special because it's driven by a love affair for a man, and rather unnatural love affair for a man. So here's the weekly chart. It's powering ahead. I don't know why I've lost this, but I had a triangle drawn here, and we had the breakout of that triangle on this candle here 2 weeks ago, and it's having another leg higher, and it looks rampantly strong. So the MACD weekly is positive. The RSI is still climbing. That's on the weekly chart. On the daily chart, also good. And you know, this candle here today, we had quite a big sell-off during the session, and down to 55450, and then it's bounced strongly. So though this is a black-bodied candle, the shadow below is very long. This means this is called takuri, dipping your toe in the cold water. Ow, gone too far. So this is a clear out of weak longs, and then the shadow, the strong shadow below, is a sign of strength. And with your Japanese eyes on, this is a strong candle despite its black body here. Daily chart is the MACD is positive, the RSI is still climbing. It's high, yes, but it's still climbing. There's no divergence, it hasn't turned down. You know, there's still power here in the short term. By this time next week, it may be entirely different, but it's that's how it's looking right now.
Okay, thank you very much, Trevor. Thank you very much for joining us, everybody. We'll hope to see you again the same time, same place next week. Trevor, do you have anything to add?
No, I don't. Thanks for your questions. I love the questions, and so please keep them coming. You know, I like the interaction. I like to know what you're interested in, and I hope you find what I say helpful, and that you're aware of these themes, and you're in the right things. That's more than half the battle. And the battle to be successful is to be in the right things. And some people I know get sort of stuck in trade one thing, and I know this thing, I trade it. And actually some other things are really easy to trade, and they're just plugging away with something which is difficult when there are easy things around which they're not noticing. And it's important to understand how the market is quite sort of faddish and fashion conscious, and you know, we've had a dominant fashion of technology which was sort of, you know, you couldn't say a word against it, but that era is over, and there's a change back to what many people would say is normal, which is value and growth stocks coming back, and they've definitely been hammered for many years, and they seem to be coming back. So things are changing. That always happens. There's nothing stays the same. Okay, well, thank you very much indeed, everybody. Thanks, Dan. Sorry I snapped at
Thanks,
you.
Trevor.
Sorry, you just caught my. I was just mid thinking about something, and so I apologise. I apologise.
No worries. Not really sure what you're talking about, but never mind.
Okay. Oh, it obviously didn't hurt when I snapped at you.
No, no. Thank you very much, everyone, and I'll see you all next week. Thank you.
Okay. Thanks, everybody. Bye bye. May the trend
Bye-bye.
be with you. Bye bye.
Of course. Bye-bye.
Bye bye.